everyone, this is Abhijit Chatterjee recording our weekly session for Charts are Fun. This is for the week of August 4th, recording this on August 10th, Sunday evening. The market has an incredible climb last week. We did talk about on our last week's video that after the gap down and market selling off on Friday previous week after the jobs data, market really was quite shocked by the 258,000 negative job revision for May and June. Totally took the market unexpected. Market was thinking that the job economy is weakening. As a result, there were expectations of rate cuts, knowing that the Fed's dual mandate and the inflation was kind of beginning to tame, and then the employment mandate was getting more worrisome. And so market, when they saw the 258,000, was a bit concerned that this might have been a wrong turn for the economy. And as a result, the market sold off, but we had pointed in our video last week that there was a beautiful double bottom. We'll reiterate and show it again. And that beautiful double bottom on the hourly chart was indicating a snapback rally this week. And we had thought that we would perhaps get that gap closed that the market left on from Thursday. And then from there, break down from a kind of a head and shoulder topping pattern. It didn't quite happen. S&P went back very close to the previous Thursday's highs, and QQQ actually slightly exceeded that. So we look at the hourly charts of S&P and QQQ. We'll look at S&P's longer term, in this case, the daily chart, but for the entire entire this year, in fact, and show you that there is a potential target for S&P somewhere in the 65, 65. So we'll show you if that's a possibility. Maybe that's what's headed. We closed very close to 6,400 on Friday. We'll show you a key financial sector, the banking index in particular, and where we see this slight more downside on the banking index that has pulled back after earnings, we know, and we'll show about that. We will talk about Tom Lee's interview with Courtney Garcia. They were both on CNBC closing bell on Friday. Tom Lee kind of pounded the table. He tends to be very bullish, but he said that he expected, instead of a seasonal correction in August that many are looking for, he's looking for actually a move higher in S&P 500. We'll corroborate that with another technician that I follow in Twitter. His name is Mo, is the symbol that he goes by. His ticker is option, like his X handle is option flies. We'll look at that. And then we will look at story stock Palantir, because QQQ was helped by the Magnificent Seven stocks, but Palantir in particular is repeating a very similar pattern like it did in February after its earnings coming out and then massive gap up and continued climb for a few days. A very similar pattern is happening in Palantir. So you look at what a potential Palantir target could be, and then end with crypto, because these two, Ethereum has been in the news a lot. Tom Lee in particular heavily betting on Ethereum. We look at that, and then Bitcoin. So that's our Charts Are Fun blog site. It's in Substack, chartsarefun.substack.com. Appreciate you subscribing to it. And when the blogs come out in the morning, you'll get it on your email. Our YouTube site is also at Charts Are Fun. If you could subscribe to the videos and hit the like button if you like them, we really appreciate it. Help us share with a wider audience. And I talked about Tom Lee's closing bell interview with Scott Wapner at CNBC closing bell on Friday. His point was that, look, there is overall still quite a bit of a wall of 40 that the market is climbing. There is a sober view about market at this moment. Investors seem cautious about valuations, yet earnings-wise in the second quarter earnings that just kind of came out, we had more than 87% of companies already report. And from what results have been shared so far, there is a 13.2% year-over-year earnings growth that companies have reported on average. That's over 9% from what the market analysts were expecting. They're expecting a 4% year-over-year. Here we got a 13.2%. That's what Scott Wapner shared. And then many are basically, thinking that, oh, this is a mixed result from earnings. Companies would get hurt by the tariffs that have now gone into place from August 1st, and those are going to impact the consumers. Is pretty weak with a lot of debt, and effectively it's going to help bring the economy down. That's what many are thinking. So Tom Lee look at trading view, his perspective is S&P will prove the seasonal correction looking people wrong. S&P will climb a higher high, and we'll show you potentially if the S&P has to go to 65 near term, then perhaps yes, he's right. It's not yet broken out above the previous Thursday's high. It came close, but maybe it'll break higher like QQQ did on Friday, and maybe S&P was the next to do that, and then kind of that was around somewhere around 64.17 or so, break that, and then maybe run towards the 65 target. Technician that I follow quite actively in X or Twitter, this is his picture, his handle is Option Flies, his name is Mo. He and 17 years professional trading experience, a very strong Elliott Wave advocate. He put out a very interesting post on Friday saying that, look, he has been talking about an initial climb out of that 48. He nailed that 48.35 low. He had talked about it. And that was on April 6th when the low, if you look back at his tweets, you will see that he did kind of project the low at 48.39. It came very close at 48.35. From there, he had talked about a sharp V-shaped rally. His target on June 18th had said potentially S&P could be going to a 6209, which is a 161.8% Fibonacci target. And if it takes that out, then potentially to 6504 is 200% Fibonacci target. But we do definitely know 6209 has been taken out, and now he's looking for the 6504 as his next target, which corroborates with what we're seeing in the S&P's daily chart of a target near 6565. So something around 65 to 60, 6600 is potentially a possibility. Another thing he does talk about is an interesting pattern that he has seen, and this has happened since the 2022 low 5 times, and this is the 5th time that's happening. Effectively, what he's saying is whenever you have a candle that's an outside candle, that means comes from above the previous week, and the body is kind of the entire shadow of the candle from the top to the bottom covers the previous week's candle, and then you have outside candle with an inside candle. Whenever you have that, outside with an inside, outside with an inside, outside with, and this is the 5th time that's happening. Usually every time you notice that the following week it has had an up week. So here in sometime between May and June, it had an up week. In the 2024 and the March to April timeframe, it had after the outside with an inside at an up week, outside with an inside and up week, outside with an inside and up week. He's basically tweeted saying that he's expecting an up peak coming into this week, which means S&P will then take out that 6427 top from Thursday of the previous week and keep climbing higher. That's his prediction. If you look at S&P's hourly chart, this is that beautiful double bottom, that W-shaped double bottom that we had presented in our last week's video. And based on the double bottom, we had said that S&P would likely climb higher on Monday, which is what it exactly did. We had talked about the positive divergence on the RSI when that double bottom formed, and that positive divergence helped kind of tell us that potentially the S&P would climb. We, however, had thought that at 6201, 6212, that would effectively be a neckline. We would get a right shoulder move, kind of close out that gap left from that Thursday, and then from there come down. That didn't quite happen. S&P kept climbing. It gapped higher on Monday, kept climbing through the week. We can see that there's a pattern of in the mornings, it kind of sells off, and then there's buying through the day, and then it kind of closes towards the high. The same thing that happened on Tuesday, and then it happened on Thursday. It sold off in the morning, and then from there, kind of some buying towards the end of the day. And then Friday was a strong day. It was buying throughout the day, and S&P just kept climbing till the very last hour when there was a bit of a sellback, but not really too much of a sell-off. It kind of closed where it opened in that hour. That said, this target of 6427, if that's exceeded, how far can it climb? If you look at the inverse head and shoulder on the S&P daily chart, going back to the April 7th bottom, 4835 to 5700, that's where the neckline is. A left shoulder here to the neckline, to the head at 4835, to the neckline 57, 5578, the right shoulder breakout. Very nice symmetrical inverse head and shoulder. That breakout from 4835 to 5700, we're talking about 800 865 points. 865 points to 4835 gives us 5,700. At 865 to 5,700, you get 6565, a beautiful number, a double pattern of 65 twice, but that's where we think potentially S&P is headed as a target from this inverse head and shoulder. Given that 6427 being taken out as the next few days pointing higher is definitely a possibility. One interesting pattern on seasonality that Mo shared in his Twitter handle is this thing. It's an interesting pattern that the early part, this is S&P going back from 1976 to 2025. He's done average gains on every single day of the month of August. Starts off weak. We can see those red candles, that is negative downward movements on the first few days of August. Then from August 12th onwards, it just has green throughout the month. Seasonality for NVIDIA, red to begin the month and then green throughout. Tesla is even stronger, just a couple of days on the red and mostly green. Microsoft is also a few days of red at the beginning of the month, mostly green. Amazon had kind of similar to S&P, goes on till 12th and 13th and then stays green. Meta has a very strong month seasonally, and they're all different time periods, by the way, based on when the analysis was done. S&P going to 1976, Microsoft going to 1987, Apple going to 1983. He kind of prints out the time duration over which he historically calculated these average gains on every day of the month of August. Google is the weakest chart. It tends to have negative seasonality throughout the second half of August. From August 17th onwards, we can see that Google is the only one that underperforms or really has negative days. Everything else is very strong seasonality, and in particular, Meta is the strongest, stays green throughout the month. Microsoft also is pretty strong, and so is Netflix and Tesla. So we shall see if this S&P correction prediction on seasonality is correct. Then maybe the rest of the few days of August, starting next week, could be not massive gains, but in a gradual climb towards that 65 target as we're expecting. Now, talked about financial, talked about banking sector. Many are looking to buy the banking sector, and in principle, if interest rates start cutting down, the short-term rates will cut down. The long-term rates will hopefully continue to stay above 4 is what the market thinks, and that net interest rate margin will help the banks. So that's where banking and then the regulation things from Basel, from Europe and so on, allowing banks to spend more of the capital to buy back their stock or pay back dividends. So there is definite interest among investors to buy banks, and that in a relative ratio. BKX is the banking index and KBW banking index relative to S&P 500. That ratio is also forming a beautiful inverse head and shoulder. The neckline is at that 0.023, 0.024 kind of level, a left shoulder here, nice symmetric head here, back to that neckline, and a right shoulder now is forming, maybe a little more pullback, but not too far, a shallow pullback towards that 0.209.6 kind of level, another little few days of pullback. And then that breakout means very, very strong upside for banking to outperform S&P 500. So for the financial and the banking bulls, this might be a good buying opportunity setting up with that right shoulder move down towards the symmetry of the left shoulder from where banking stocks could start outperforming. So JP Morgan, Wells Fargo, Citigroup, Goldman, Morgan Stanley, these are all the various kind of stocks in that banking index. Talked about QQQ's hourly chart, and that we can clearly see it took out that high from that previous Thursday. We know that Friday we had that gap down after that, the huge non-farm payroll upset or negative data. That double bottom here again, you can see it tested 560, 551 twice. So 551, like it was a 6200 for S&P, is a key support. That support was beautifully tested with a double bottom test with a positive divergence in RSI. And then from there it took off and it gapped higher on Monday. So the entire week it has been climbing. And now it has basically taken out that previous Thursday's high at 574.63. We see it was 574.77 in Friday, and it closed very close to that at 574.55. So there is relative strength definitely in QQQ going and printing new highs, and potentially maybe there is upside if S&P is going to climb towards 65, potentially some more upside on the QQQ or the NASDAQ 100. Now, if you look at Palantir, There is a target that we had drawn from a cup and handle, and that cup and handle was beautifully at 125, testing twice, 125.41, 125.25, with the bottom of the cup at 66, formed in April 7th low. So 66 to 125, we're talking about $59. At 59 to 125, we get 184. That was the target that we thought Palantir, looking at that negative divergence with the RSI printing lower highs, is where it would top out. Turned out we were wrong. This is exactly what happened in February. Earnings came out, kept higher, and kept running. And the same kind of negative divergence pattern that had happened through the months of November, December, and January was invalidated. RSI climbed hugely to a very strong higher high, and MACD climbed hugely to a very strong higher high. A same pattern is shaping up now. That negative divergence has been invalidated. We can see that RSI has climbed over that lower, like lower high pattern into a higher high. So much higher strong RSI and a much strong MACD climbing. So we are potentially repeating this pattern into February, from February 1st all the way to February 18th, and potentially into August for maybe next few days. This happened for at least 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. And so far, we've only done 4 trading days since that gap higher. It's all of next week to into early the following week, we could potentially see Palantir climb. Well, how high could that climb? And the next target to use is something called an ascending triangle. We see higher highs, 125, 133, 135, and higher lows, 66, 91, 105, 118, 119. That breakout of that ascending triangle from 66 to 135 measures to 204, 205. So that's where we think has been a target that Jim Cramer had talked about, Palantir above 200. Other folks like Dan Ives, he's a mega bullish in Palantir, also with target over 200. Maybe it's a self-fulfilling target. Wall Street bulls want to drive Palantir high towards a 200 plus target. RSI definitely very overbought. MACD also stretched out and overbought. But from there, we do see sharp pullbacks. Palantir is known to climb vertically, parabolically, and then have sharp pullbacks. And the pullback comes towards testing that rising 50-day, which now we can see has diverged a lot from the 200-day. The 200 is 99. The 50-day is 145. If it keeps climbing towards the 200, that 50-day will also climb because it's a lagging indicator, will climb as higher high value come. So this could potentially go towards the 155, 160 level by the time the 200 is met, and then a pullback. So we wouldn't be surprised initially that top of the gap at around 160, if we just hover this around here, we can measure the exact top of the gap at 169. You can see. So the previous day it closed at 161. It clapped up to 169. So 169 we think will be a key support that Palantir may pull back to, and then from there maybe digest a bit and before it breaks down further. But move towards 200 is possible in Palantir, and from there potentially a pullback towards that level that we said here towards the 169, the top of the gap. Now, Ethereum, the cryptos have been on an absolute blast. Ethereum has done extremely well. So we thought we'll look at the daily chart of Ethereum. And this one has got, again, a beautiful cup and handle, the 28.55 going down to 14.12, cut in half in March through April. Imagine how volatile cryptos can be. Ethereum got cut in half, 28.55 to 14.12 from late February into April 7th low. Double back. That's how how volatile and big these movements are. So from 100% move from 1400 back to 2879. That's a beautiful cup. When you have the right brim above the left brim, that's usually very bullish. So 2879 above 2855, a shallow handle, and then the breakout. So if you take that 1412 and the 2879, you're talking about 1465 points. Add the 1465 to the 2879, that measures to 4346. So 4346 has actually been already very close to be met. On Sunday, in fact, this is trades Ethereum, Bitcoin, they all trade 24/7. So this candle that we're seeing is actually printing a reversal candle. It's got so far slightly in the red, down $14, but it's showing that it's kind of hovering at very opened at 42.62. It's at 48.48. So that's a doji reversal candle. But that target, the high was 43.33. within $13 of that target of 43.46. Negative divergence, RSI at lower highs, MACD at lower highs is a bit of a concern. We think crypto has gone up, in particular Ethereum has gone up quite a bit in a parabolic fashion. Would not be surprised to see it pull back at least from this negative divergence, unless something strong happens, and that's what the bulls are saying. The bulls are saying that, look, there's a beautiful base from 883 towards the 4100, pull back to a higher low at 1384. 4100 breakout here could be a mega multi-year base breakout from the previous 4100s tested towards late 2021. So they would look for 883 to a 4100. You're talking about close to almost 3,300 points. So 3,300 added to 41, you're talking about 7,400 kind of upside target for Ethereum. That's what the bulls are going to look for. What we have to be cautious about is we need to see strength in RSI. We need to see strength in MACD to confirm this. Like we see on the daily chart, that's beautiful strength. When that breakout came, when we got that cup and handle breakout, look at RSI, much stronger than when it was at the formation of the kind of the cup itself. Much stronger RSI, much stronger MACD from the previous highs. That's what you expect on a cup and handle breakout. This so far, if it has to really break out at the base, you'd expect RSI to climb back above 70, MACD to climb higher highs, kind of start showing that kind of a strength like we saw in this parabolic climb. RSI staying steadily above 70 for a long duration during the climb, and MACD kind of vertically climbing the signal line in the MACD, which so far we've just had the bullish cross of the signal line above the moving average line, the red above the black above the red, but we need to see this start climbing with momentum for Ethereum to really take off. Now, a similar cup and handle is formed in the Bitcoin chart. It's also from its daily chart, like we showed on the Ethereum chart, in the time frame from February through June, and then a handle and breakout. Bitcoin has a slightly earlier time frame when the cup formed, 109 to 74.4. That was April 7th low to 112, but not in June, but the right brim formed in May. From there, a shallow handle. So this from 74.4 to 112, you're talking about 37.6, 37,600. At 37,600 to 112, we talk about 149,600. That's the measured target on this cup and handle. We're still, showing some strength on this day in particular, Sunday so far. We've climbed 2,700 points in Bitcoin. So Sunday, it is showing strength. It is showing MACD about to have a bullish cross. MACD had come back to do a central line reset. And then from there, we see the black line above to climb above the red. So if we do see some strength in MACD, see RSI to continue climbing to a strong above 70 level, then potentially we could see that explosive upside move. And Bitcoin, if you look at its longer term chart, when it moves monotonically for months after month. This is every candle is a month. We've seen that in the last two post-halving periods. There was a halving in 2016, a vertical climb continuously for months, several months at a time, 10 to 12, 14 months. It kept climbing. Similar kind of a climb in 2020 into 21. And we are kind of begun to see the climb. We can see that from that longer term base of the 69 to 15,000 back to 73. This is another cup and handle on the longer term chart. So 15 to 73, you're talking about roughly 58,000 at 273. That's about 132,000 as a target. That's what Katie Stockton and some of the other technicians have called as an upside for Bitcoin. So now we can see this is month, every candle is a month, and we can see that the last 5 months it has been climbing. It could pick up momentum like we see here, like explosive climb. So from that 119 climbing towards the 132 can come pretty quickly in the span of the next few weeks. In fact, we could see this thing take off, and we can already see it's at 2.3% just on Sunday towards the highs of the 119, 184, 119, 184. So already at the highs of the day. So we could see that explosive upside in Bitcoin and look for that target of 132 to be met. And as we have shared before, Bitcoin targets can be even higher. If you look at this as 74 to 123 as a flag pole, a bullish flag pole, and then kind of a pullback of a flag from there and the breakout from there, look at how the pullback from 123 exactly tested that 112 top of the rim. That acted as now strong support, did not fail below it, started climbing. So that climb from that 74 to 123, you're talking about close to almost like 50, if you add 50,000 to 174, that's 124, 123. So it's almost like 59,000 or so, 59 or 58,800. Add that to the 123, you're talking about 172,000. So that's the potential target of Bitcoin, closer to the 172 if you take this bullish flagpole with the bullish flag that is formed and a breakout above 123. So anyway, near term going towards that 132 from this cup and handle in the monthly to that bullish flagpole, taking it, and then also on this daily chart of the 109 to 74 to 112, that target measured towards 150. So three successive targets, 132, 150 into 172 could be the ultimate bullish potential for Bitcoin. And we could be looking at an explosive climb. Maybe that's Tom Lee's correction expectation could be right. S&P could go towards its 65. His target for the year has been 6,600, and he's also said that he thinks he could have been a bit conservative, and S&P could go even higher, closer to 77,000 and higher by the end of the year for the 2025. That we just wanted to share. Tom Lee's bullish expectation, the Twitter handle of Mo, his option flies, his bullish expectation that he expects 6,500 as the S&P's Fibonacci target to be expected. He's also shown a much more bullish target. Seasonality also is very strong as far as he's concerned in the second half of August for S&P and for the Magnificent Seven. That can help S&P coming fire. And then he's talked about his mega bullish trends to continue showing S&P climbing higher. S&P on the daily chart, we've shown here from inverse head and shoulder, could go to 65, beautiful number of 65 doubled, but that's a potential possibility of that being achieved in the next few days to weeks. Banking index forming a nice inverse head and shoulder. Great time to buy the banks once it tests that right shoulder. A few more days of pullback, and then a breakout higher in banks. QQQ shows retesting the Thursday's high, about to break higher. Palantir, has met its initial target of the cup and handle at 184, but the ascending triangle target continues to be over 204. So that's potentially where it could be climbing. Ethereum is met its near-term target with negative divergence. We'll see if it lags. So here Ethereum is forming a bearish kind of candle, like a doji reversal candle, when Bitcoin is printing just the opposite, a bullish candle. So maybe Bitcoin starts outperforming Ethereum for the next several days to weeks and climbs towards its target. And with that, maybe the Bitcoin miners do very well, Mara, right? And then the Bitcoin ETFs such as GBTC, FBTC, IBIT could be great opportunities to invest to have this beautiful bullish climb in Bitcoin. Good luck investing. We'll talk to you next week. Thank you.